Hey, I'm out walking on a beautiful Saturday morning just outside of Chicago, and thought I'd pop out a quick video talking about this week. What a crazy week. From the just extreme volatility that we've seen in the financial markets, up and down 5% a day it seemed, and then to end the week flat is pretty amazing. But just a quick rundown of some of the things that happened this week in case you forgot. We started the week with a rate cut by the Federal Reserve of 50 basis points, which the markets anticipated to some extent, and they rallied but then sold off after the Fed made the rate cut because some people thought that the Fed really couldn't solve the problem of a health issue, which is exactly right. And so then we started getting more and more data on the US coronavirus outbreaks. And really what this breaks down to is this, is the mortality rate. You know, we've had 100,000 people infected with 3,400 die, so a 3.4% mortality rate. And that's what we're trying to get a grip on right now, is to see what is that mortality rate. Because if it's 3.4%, then it's certainly 7 times what the normal influenza rate is at 0.5%. And if we do the math really quickly, if there's 30,000 people that die from influenza a year, just multiply it to 7, and you get about 210,000 people in the US alone that will die. Now that is a big number, but I think it's going to be a lot bigger globally. And that's what WHO's been warning about, that the poor are really, in the poorer nations, developing nations, are really going to be the ones that are most severely impacted. So we're waiting to see what those numbers look like. The other problem with this mortality rate is, what's the actual set of people infected? Is it 100,000? Well, then it's 3.4%. Is it 200,000? Then you take that and divide it in half. If 300,000, and then it's 0.7%. That starts to look a lot like influenza. But the point is that this is ongoing. There's still tremendous uncertainty out there about the coronavirus, but we do know the impact on the economy is coming, as the Institute for Supply Management said that a lot of their companies were warning about it in their upcoming data. So that's what we're going to have to deal with: a dramatic slowdown in the economy as people again stop acting in a normal way and really try to adjust to the coronavirus. And that's what we're going to have coming up for the next couple of weeks. We're going to have very soft economic data, and the markets are pricing that in. So things have calmed down a little bit, but they're still extraordinarily volatile, and there's a lot of concerns and really uncertainty over the coronavirus. Not a big surprise there. All right, it's a beautiful day here in Chicago. Let's keep our spirits up and see what the future brings.